Buckle up, because three financial titans controlling over $20 trillion just flipped bullish on Bitcoin in the span of 1 week, conveniently after the prices dropped 30+%. Vanguard, Bank of America, Charles Schwab all made their moves. So today I want to update you on these news stories. Then together, I want to try to project how much in fresh money, cash, we can expect from these news sources and what that might all do to the price of Bitcoin. First, what happened last week? On the evening of December 1st, Vanguard, which is the world's second largest investment management firm just behind BlackRock. They have 50 million clients. They have 11 trillion in assets under management. BlackRock only has 13, okay? So it's not a big difference. Vanguard's a damn big deal. They announced that they would open up the US crypto ETFs to their brokerage clients the following day. The next day, just as Vanguard's customers were getting access to these ETFs, Bank of America, which is America's second largest bank, they announced that they're recommending to all of their wealth management clients to allocate from 1 to 4% of their portfolios into crypto. The next day, I mean, come on, you cannot tell me it's not coordinated. The next day, December 3rd, Charles Schwab's CEO Rick Wurster, they confirmed that the brokerage, which is the second largest in the USA, I guess it's the weakest seconds, isn't it? Anyway, the second largest brokerage in the USA will be opening up spot Bitcoin and spot Ethereum trading on their platform in the first half of 2026. A lot of speculation will even be in Q1. So there it is. In 1 week, the world's second largest investment management firm, the US's second largest bank, and the US's second largest brokerage firm all dove into crypto in one way or another. And the week before, by the way, Amundi, Europe's biggest asset manager, got into crypto too. We're not talking about them in this video, but worth a side note. So how much in fresh inflows can we actually expect from each of these sources? Now, let me warn you, coming up with these projections is not easy and it requires a whole bunch of magical number sprinkling, okay? But we gave it our best shot here. So starting with Vanguard first, understand that Vanguard is primarily an investment management firm, meaning the majority of that $11 trillion in assets under management is in the form of advisory directed assets. And that's not what Vanguard's announcement last week was about. Their announcement concerned their brokerage customers, or their client directed assets, which comprise about 20% of the company's total assets under management. So that's around $2 trillion, okay? Nice pool of funds. That pool of funds right now has no exposure to crypto. Well, they got exposure this week. Some have started buying, but essentially they have almost zero, a few million bucks, right? But they can get a lot more. So the accurate question to ask here is how much of this $2 trillion could realistically go into the ETFs over, say, the next 2 years? That number, according to our analysis, is about $8 billion. Not bad. For a bunch of reasons that I won't go into, Charles Schwab's client-directed assets under management is probably our best barometer for projecting actual Vanguard flows here. The 11 trillion number is attractive and gets clicks, but the reality is more like 2 trillion. We should focus on that. It's still a big number. We know that Charles Schwab's client-directed assets under management is 5.8 trillion. We further know that Charles Schwab clients own about 20% of the entire U.S. crypto ETF market cap. And since the US spot Bitcoin ETF market cap is about 122 billion, that means that Schwab clients own about 24 billion of it, or about 0.4% of Schwab's entire client-directed assets under management. So therefore, let's make 0.4% our number. Realistic, grounded in some sort of model reality number. Maybe that's how much we can expect from Vanguard brokerage clients with their pool of around $2 trillion. That's how much they may plow into Bitcoin ETFs over the next 2 years. And that 0.4% as part of 2 trillion equals about $8 billion. Now, before we get into the next part of this conversation and Bank of America, guys, I want to let you know about my insanely awesome investor community. It's called the Inner Circle. There's a link down below. You can sign up. It's $50 a month. The value is absolutely insane. Weekly altcoin reports, weekly stock reports, macro signals, charts with entries and exits, our token sniffer bot, DeFi reports, prediction markets, and you're going to get our trading course for free. $299 value, by the way. Free trading course when you sign up for a monthly plan. $50 a month. The value is absolutely insane for everything you're getting here. Link down below. Go check it out. Thank you very much. So, Bank of frickin' America, man. How much inflow can we expect from the announcement? Well, we're on even more shaky ground here than with the Vanguard projection, okay? Meaning, just because Bank of America is recommending that their clients allocate 1 to 4% into crypto doesn't necessarily mean that their clients will actually allocate 1 to 4% into crypto, at least not in the short term. But for the sake of argument, let's assume that over the next 2 years, this entire cohort is convinced. They get the calls, they start making the bets, they buy some Bitcoin. These clients control about $2.1 trillion in assets under management, allocating 1% of that money into crypto. That's about $21 billion. If you assume that 80% of the $21 billion goes into Bitcoin ETFs, that's about $16.8 billion in new inflows. If we get the higher percentages, it's a much bigger number, but we're just gonna go with 1% here anyway. Finally, the Charles Schwab announcement. This is the US's largest brokerage, and this year they'll be letting their clients trade spot Bitcoin and spot Ethereum on their platform. And that therefore means clients will be able to actually custody their coins on the platform as well. But, big announcement, we also need to understand something else. If Charles Schwab is allowing this, then I think almost every other stock brokerage platform will have to go down the same route over the next year or two. Plus, Charles Schwab clients, as we just mentioned, already do have pretty good exposure with ETFs. Is it all the exposure necessary? Not necessarily, but it's a lot already. Now, here's the top 10 stock brokerages trading platforms in the USA. Currently, 4 platforms already allow for spot trading, 6 do not. But like I said, expect all these arrows to be green by the end of probably next year, except for maybe Vanguard. I'm not expecting them to open up spot crypto on their platform within the next year. ETFs are already a big step for them. So here's the 5 platforms that I think will open up their spot trading along with their estimated client-directed assets under management, $6.7 trillion. Now, Fidelity, which already allows spot Bitcoin trading, has estimated $6.4 trillion in client-directed assets under management, with somewhere around $1.2 billion in spot Bitcoin sitting on their platform. Those are the analog numbers that we need, percentage-wise. Since this group's total AUM is close to Fidelity's, then we can assume that this group will probably also bring in, 1.2 billion, let's say 2 or 3 billion to be generous, round up a little bit, onto their platforms. Now, I know that's a lot of numbers. When we add this all together, these are all pretty low ball estimates, to be honest. Any of these numbers could be much higher, especially if we get a very exciting season and everybody wants to FOMO in. 8 billion from Vanguard, 16.8 billion from Bank of America's wealth management clients, if they really do put in 1%. Remember, Vanguard puts in 1%. That's also going to be a much larger number, about 16 billion as well, but just we're going very base numbers here. If Bank of America does 2%, that's 32 billion. You understand. Maybe about 1.2 billion in spot accumulation from the different stock brokerages that are not the top brokers. We get a grand total around $26 billion in fresh inflows over the next year or two. So the last question we've been waiting for, what's another $26 billion in fresh capital inflows going to actually do to the price of Bitcoin within this time frame? Now look, there's so many variables to run through this, and it's impossible to predict. Does Satoshi wake up? Do Bitcoin ETF buyers over at BlackRock mega dump and this all just gets equalized out? But let's load this question into Grok. Ask the AI, okay? Feel free to steal this prompt and play around with variables on your own AI. So here's the question. We're thinking that another $26 billion in fresh capital will flow into Bitcoin over the next 2 years from these sources. Here's Bitcoin's current price, its current market cap, its coins in circulation, and its mining output. So, Grok, what is your most reasonable estimate on what all this does to the price? Now, Grok has some interesting points here to consider. Essentially, here's where it landed. By the end of 2027, the bear scenario is $133,000. The base scenario is $156,000, and the bull scenario is $184,000. Very interesting numbers. Will the AI be right? Will we see bigger inflows than our very, very limited base case had us at? Because remember, all the numbers we gave were basically base case low ball numbers. If we get even slightly above those very, very modest estimates, things could get real crazy. Thanks for watching.